All right. Hello, everybody. Welcome back to another episode of Palantir Weekly. This is episode number 110 on the channel. I'm here today with Vince, Arnie, and Amir, who was supposed to be on last week. Amir, why don't you tell everybody why you didn't make it last week?
My iPhone glitched up. When you set alarms, you can set it for specific days. I only had the weekday, so I couldn't wake up 4 a.m. I'm sorry, guys. But I'm here now. So you have me now.
Blaming it on the iPhone to me is very
Tim Cook, man.
It's
He
very
just didn't want to make it happen.
In life, there are certain things that can't be excused.
I wasn't able to forgive myself, so I've been repenting for a week straight.
All right. Well, we're here. We're going to talk about Palantir. Bunch of stuff to talk about. I think we'll start off with the news of the day. No S&P 500 inclusion is happening for Palantir. And the reason for that is because a shoe brand called Deckers and SMCI, which is the server, infrastructure company for NVIDIA's GPUs, are joining instead. So, raw thoughts. Let's start off with you, Arnie. You were with me live when we saw this all happen. What is your reaction to us not getting into the S&P 500?
Meh. Well, obviously, I'm sorry because I had a small trade that didn't go well. I essentially bought more shares, selling the Robinhood shares I had on another broker, like the account I just used for this stuff. But was it worth it? In my opinion, yes, because yes, we saw Palantir dropping a little bit, like minus 3%, but supercomputer actually went up 12%. So the opposite could have happened to Palantir. Unfortunately, it didn't happen, and I'm sorry for that. But at the end of the day, we know this is one of those situations where it is only a matter of time before it happens. So annoying, yes. Does it change anything? Not really. I would be curious to know what are the criteria in this case, because the market cap of Palantir and this supercomputer is essentially the same. They belong to the same big cluster of AI, and maybe that was a reason why they just included one rather than, boom, two altogether.
Okay. Vince, your thoughts on this?
Yeah, I don't know if it's only me, but it feels, the market feels very 2021-ish. And let me tell you, my uncle called me about a week ago, and he started trading last month, and he made 10% profit. And he called me that he has an idea to start a YouTube channel and sell courses on the stock market. And I was like, oh. And then yesterday, my accountant came over to speak to me, and he's never interested in the stock market. And he's like, did you hear where Bitcoin is? My colleague started talking about it, and they invested a lot, and I also had to invest, and now I'm up 30%. And I was like, okay, that's good. And then he's like, do you have stock investments? And he doesn't know that I have the channel. And I said, yeah, I'm into Palantir and Rocket Lab. And he just like pulled up his phone, and he just bought $500 of Rocket Lab because I mentioned it.
So you're pumping the stock. That's what's happening.
And basically, and what I'm trying to get at is he didn't buy Palantir. Palantir is still not included in the S&P 500. He wasn't talking about Palantir. My uncle was not talking about Palantir. So despite we are at 2020-ish fever, it doesn't feel like Palantir is fully part of it yet. So I'm happy that we didn't get included now, and that means that there's more goodies to come in the future, and we're not at the top yet.
Okay, Amir, your thoughts on the S&P 500?
As Arnie mentioned, it's only a matter of time at this point, but I also just kind of want to have it behind us because we know it's just a matter of time. Like with the NHS contract, at one point when you're waiting for like 2 years, you just want to put it behind you. But Arnie mentioned something interesting. I'm also curious how the board reviews the inclusions, because in terms of market cap, I mean, there are many companies below where Palantir is trading. Even if you normalize Palantir's volatility, Palantir would still be big enough to be included. So I suspect there's maybe a problem in regards to Palantir's operational profitability throughout all the quarters. We do have that now. So yeah, I guess it's just a matter of time at this point. I don't think it's like, well, we can only include one company this review because they're part of the same AI group. I don't think it's something like that. I think it's more like probably tied to the operational profitability.
Well, Amit, during the stream, shared something that I didn't really think of it regarding the already existent institutional ownership, which for the case of Palantir is still very little given the high retail participation, while for this super microcomputer, actually the institutional ownership was already high. I don't think it is a matter of volumes, because we know that the volumes for Palantir are already very strong. So it is not, okay, you include something in the index that is not really liquid. I would say that is not the problem at all. But there could be some dynamic where they say, okay, we just want the institutional ownership to be, let's say, a number at least for 50%. Now we are more closer to 40. Now, I remember also Tesla didn't get included straight away, but I don't remember the reasons. Maybe Vince, do you remember something?
I mean, they never give reasons why they don't include you, but Tesla was the biggest company to be included in the S&P 500 ever, as far as I remember. And it had a huge market cap. I think it was like at 400 billion when it was included, maybe even higher. And yes, it took a while, but there was no reasons given. At one point, there was conspiracy theories that it's not included on purpose.
Mm-hmm.
But it's an interesting thought, because just being included will give you like a passive increase in institutional ownership just by inclusion. As you mentioned, we have Tesla as an example. Like at the time of inclusion, like now it's like around 50%. I can only imagine like by the time they were included, it must have been more similar to where Palantir is now. So yeah, I'm not sure about the dynamics. In the grand scheme of things, it doesn't really matter to you as an investor. I mean, there's no intrinsic value added just because they're included in the index. I mean, it will be nice for the price movement for those more curious about perhaps trading, exiting their position, streaming, something like that. But I mean, for me, doesn't really matter that much. I just want to have it behind us. But it seems that we'll have to be waiting a couple of more months at least.
Decker, the shoe brand, they did 4x Palantir's net income. So I saw that as well. So what Arnie was pointing to in terms of profitability, and the SMCI I think is much more profitable than Palantir right now as well, if I'm not wrong on that. So it does seem like they looked at profitability as a basis. I mean, obviously Palantir is really profitable because of net interest income. So like that's probably something the committee took into account. And then the institutional ownership stuff. The question here is that, do you think the next time there is a rebalance, I guess my question is, what do you think they have to do in the next 5 months on the next decision to actually impress them? Like, do you think it has to be institutional ownership goes up 10%? Do you think they have to be profitable? Their income from operations has to be greater than their income from interest? What do you think it would take for them to officially admit them?
Well, just to be more speculative, I would say if Palantir becomes even bigger in terms of market cap, the implicit pressure to actually have it would increase, because as we mentioned many times, now there is a strong interest for AI, but there are essentially no other pure AI software companies apart from, let's say, C3 AI. But
Right.
it will take like 20 years to enter the S&P 500 V space. There's basically only Palantir. So if institutional investors somehow show very strong interest in having Palantir in their portfolio, and maybe they realize, okay, just because it is not in the S&P 500 index, many institutional funds can't really buy it. something not exactly the same thing, but broadly speaking, the same cluster of ideas of okay, maybe there are institutional investors who want to buy Bitcoin, but they can't do it this way because their rules prevent them from buying something that is not included as an ETF. So essentially, when you buy then an ETF, you buy the same thing, but now with a tool that you can. So maybe there are some many funds that would want to buy Palantir, but simply they can't because not included in the index.
Amir, any thoughts on what they need to do, you think, to get included into the S&P?
I think they should already qualify and be eligible. In regards to like interest on cash, I mean, it keeps going up, so it's hard to compete with the cash pile. I think last quarter it was 5.15% effective interest on the cash, so that's really nice. I don't want that to go away. No, I just think they should keep performing as they're doing now, show stability, I guess. Because there is always the risk of inclusion if you have like really volatile results. So just keep improving quarter over quarter, and I think we're going to see an inclusion soon, if I had to guess.
Okay. Vince, anything you think they need?
Yeah, I mean, they're qualified already, and I agree with Arnie that the higher the market cap goes and the more successful they are, the pressure just keeps increasing that they should be included in the index.
All right. Let's move on to this topic. So one of the people on this podcast did something this week in regards to writing an article, and we're going to pump his article right now on the podcast. So I'm putting this in the chat. Click on it, refresh it 50 times so he gets paid from the article. Don't tell Seeking Alpha we're telling you to do this. Here we go. Amir says the paradigm shift is here. Rating downgrade. So you downgraded the stock.
No, I got so much shit for that. I mean, people, you know, people make fun of mainstream media and analysts that only cover, titles. Like, oh, you just read the title and made up your mind. And I think like this community really roasted me on the title. You have to include rating downgrade. I mean, it's a very, very bullish article, but I got so much hate. I'm like, did you even read the article? It's so bullish for Palantir.
Dude, no one reads the articles. Like, no.
Yeah,
I
got so much shit from that.
Okay, so
Hasn't YouTube taught you anything?
Yeah, YouTube didn't teach him anything. Well, what's the point of this article? When people read it, what should they expect from it? And what is the paradigm shift? What are you talking about here? Can you summarize it here?
The summary of the article is that we, as of Q4 2023, which is the latest financial report that we got, we can finally start to see real AIP impact, and it's mainly in the sales efficiency of Palantir. We're not seeing it in revenues yet, even though Palantir quotes 70% year-over-year growth. That's on the back of a negative Q4 2022 quarter. So revenue isn't showing like real AIP growth trends the way the customer count is. And then I just analyze how much does it cost to acquire a customer acquisition cost, and how much does it take for the customer acquisition cost to repay itself. So all about sales efficiency, and the paradigm shift is that for many years now, we first criticized Palantir for being too big of a product. It was simply too good, too massive. It wasn't easy to like purchase, because you maybe want to solve one solution, but when you buy Palantir, you're like buying this whole package that can do so much, but you only want to utilize a small percentage. So in 2022, they made modules, but it was still there was no go-to-market strategy with that. So finally, in 2023, we got the go-to-market strategy. So we have modularized Foundry, and then in 23, we got the boot camps. And it's taken some time to actually see the bootcamp impact. But as of Q4 of 2023, we do actually see some real impact. And we can try to extrapolate that into the future to try to see how effective and efficient can Palantir be in the future, and what would that mean for Palantir's margins. So that's the gist of the article.
Amir, you mentioned the CAC, so the cost of acquisition to getting a new customer that is improving dramatically. Could you give us a sense of what are the numbers, how much it improved?
Yeah, sure. You want to pull up the...
Yeah, I can pull it up. Yep.
So basically,
I think this is the...
I think you can just click it to get...
There you go.
So here we have the customer acquisition cost per customer and the implied customer acquisition cost payback in months. So how many months does it take to recoup that customer acquisition cost?
How did you calculate the CAC? Or is it in the 10K?
No, it's not listed in the 10K. So you have to do it manually, which is a bit annoying. The payback per month, I think if you click out of that, I show the formulas.
Okay, so
the customer acquisition cost is simple. You just look at the sales and marketing costs, and then you divide that by the previous period, so Q3 against Q4 net addition of customers, and then you get the customer acquisition cost.
okay.
The payback in month is more annoying. It's below that. So I have listed up.
Oh, right.
It's just above the image. So that, so it's a bit more complex of a formula. Simply, you look at the annual recurring revenues divided by the addition of customers, and then you multiply that with the total revenue X cost of revenue and DNA and stuff like that. And then you multiply it by 12. So that's not like, for those interested, you can read the article to get the whole. But if we look at the chart again, we see something interesting here, because if you look at Q4 in this, like across all the periods listed here, it looks like, well, Q4 isn't really that good, is it? I mean, it was lower in 2021, but what people forget is that 2021 and early 22 was very boosted by SPACs. So it's not really representative of the organic operations of the company. All of 2021 should be completely disregarded, more or less, in this sense. So as of Q4, like, Palantir's sales efficiency is organically the best it's ever been. And the trend is really clear. We know that AIP launched in Q2 of 2023. We can see a clear downtrend in terms of customer acquisition costs, which proves that bootcamps are working. And we can also see that the time for payback is also clearly improving a lot here. And I'm expecting this to improve even further the more that we start to monetize AIP more properly. And as far as I know, from what I've heard, for example, from Either Square that reports bootcamp activity and foundry activity, I think they're only ramping up more and more, which rhymes well with what they said on the earnings call as well. So this is really, really positive for Palantir.
I personally expected this quarter to be the bottom. It is actually quite surprising to see that 2021 was actually better in terms of customer CAC, cost of acquisition per customer. And you mentioned the SPACs. I would underscore also the huge government contracts for COVID. I think they impacted the metric, because when you get big deals that generate a lot of revenues, but you incur very little marketing cost to get them, implicitly you decrease the CAC per customer, I would say. So, well, if we flip, it's like, okay, as you mentioned, it is really good that we are essentially at the same metric as of when we knew huge catalyst that helped the metric to go there. So essentially, organically, we got a phase where previously was hyper-hyped by SPACs and government.
I think what's really interesting about this, I mean, like the biggest thing that's interesting about this picture that I'm seeing right now is that the Europeans still use the comma where there should be a period. I like it's flabbergasting, to be honest.
It's called the scientific method, Arnie.
I don't understand how you use a comma. Like that should be 89.95.
And I don't understand how
89,95 makes no sense, dude.
I don't understand how you use body parts for measurement as well, or like pick up a rock in the woods as like some kind of.
Be careful of what you say, Amit. Here, like this is your channel, but here you are a minority. Keep that in mind.
It's 3-on-1 here,
dude. Looking at it makes me spaz. I'm like, why are there commas when they're supposed to be periods? I don't get it. But no, it's really interesting. Go ahead.
The mess when you are an analyst, having to deal with both, and then you have to change Excel every time this is an Italian company, everything is in Italian, and then this is a US company, I need to switch everything.
I mean, just one last comment on the previous thing. If you look at sales and marketing spend for Palantir, especially during 2021, I mean, it's not that much. I mean, it's pretty stable for Palantir, like always since they went public. The same goes for most other costs. Like their costs have been stable for like a long time now. And remember, that's weighed against like 40+% of revenue growth year over year. So that just shows you like how impressive Q4 of 23 is when it's weighed against like a 40% year over year growth in revenues for Palantir during that 2021 period. So I think we're seeing some very, very positive signs. The revenue impact isn't there yet, but this is giving us some hints like into how efficient bootcamps actually are.
Yeah, and I think that goes to the Ether Square point that we talked about it a little bit, but this thing was pretty incredible. So he finds Foundry links, company.palantirfoundry.com type of links, and he says in terms of new links created, Q1 this year is already bigger than any quarter of Q3 2023 in terms of new links. In the past 10 days, Palantir registered 50 new entities. These are absurdly big figures. Q1 still has another month left. What's also interesting is this doesn't mean these are new customers. These could be pilots, obviously. But if the conversion is 35, 40%, which is what Dom on a couple pods ago said is kind of reasonable to assume, we're going to get a lot more customers. So, Vince, any thoughts on the new number of links that are showing up? And then we'll get Arnie.
Yeah, I think that there's a lot of unpriced in growth ahead for Palantir, because we should receive a lot of growth from customer scaling, and on top of it, the AI bootcamps are also scaling. So it's like scaling on scaling. So there is a lot of good things to come in the future.
Arnie?
The first thought I had was very like 200 links. We are at 2/3 of the months. So if we extrapolate that number, we should see like a 300, something like that, links for the quarter, assuming the same speed. But what is interesting is that typically Q1 is not a good quarter for Palantir. Like the best quarters for SaaS companies are Q3, Q4, essentially when the new budgets are set and the IT department say, okay, now we can spend this amount, let's go and get a deal. We have to remember that bootcamps are targeting not only new customers, but also existing customers. And I would say there is a lot of space to keep expanding the existing customers, especially those acquired in the last 2 years. So don't forget the existing customers, and don't forget that the net dollar retention so far is actually something that is keeping the growth relatively down. 107%, 110% or whatever is still very, very, very low compared with a net dollar retention we were used to see, and frankly, from what I also expect. But what I found interesting is I found on LinkedIn this let me share this post from a Palantir employee. Essentially, they made a bootcamp with 22 companies and over 100 attendees. I find this number interesting. These numbers interesting because my gut feeling from what I've been seeing from the first boot camps where we just saw Carp and some other guys in a room, these are becoming big events, and the number of boot camps is increasing, and the size of the boot camps is increasing. Meanwhile, we have seen, as we discussed also with Dom, that also the online activity, especially on the hospital space, and there Red Square shared some other hints, is really fastening up. So I would say from outside, even without looking at the financial numbers, I would say I've never seen a momentum of the company this strong in these 3-4 years I've been following it.
Go ahead, Vince. You were going to say something.
Yeah, I just have a question. Like, do you guys know if this, for example, this boot camp, do they count it as 22 boot camps, or is this like one boot camps with 22 customers? Because when they say, you know, that we have had 300 boot camps last quarter, I always wonder, like, do they count each individual customer on the boot camps, or they had 300 separate events and all of them maybe had multiple customers on them?
I always thought it's one single one, regardless of how many attendees. So I interpret it anyway.
Same.
Yeah, that's probably
Okay.
one.
Okay. It just sounds almost too good to be true, but amazing.
They're scaling,
Yeah.
dude. Go ahead, Amir.
Yeah, and it's really interesting to try to because we know they've echoed this many times. Carp says we have no pricing strategy. We just want to take the whole market. We're seeing them invade like so many industries now. Healthcare, which is massive. Like if they can become the player there, the implications are insane. But we still don't see the actual revenue impact. I mean, we can look at something like RPO bookings, which is the remaining performance obligations, because when you sign a customer, it's not like a checkout on a website. We're like, well, I want Palantir checkout, and then you pay right then and there. It gets booked. So if we look at something like performance obligations bookings, which is like the net change over the period against added to the revenue, we have something like 380% year-over-year growth as of Q4. Again, that's against a weak Q4 of 22. But even if we look like quarter over quarter, it's like 50% increase. I mean, it's something massive. So they're really starting to add to the bookings here. And when we start to recognize all this revenue and we actually have a pricing strategy in place, I think it's going to be completely massive. And I've said this. I do think, I mean, people like to speculate. I know that like CodeStrap was one of the first ones. He says like, I'm expecting like a 40-50% revenue growth quarter coming, and I believe it's coming. I mean, the signs are there, so I'm really curious to see how this plays out now.
I mean, as investors, we love to hope for high, strong numbers, but at least on my side, there was always that feeling, okay, what I've been seeing from outside is good, is positive, everything is progressing, but this is not enough to actually get there. And I would say now with these boot camps, they unlocked a new dynamic where everything is faster, more cost effective, and that also creates more pressure for its partners. Palantir now is focused on enlarging the partner network, meaning consultancy companies essentially reselling Palantir. But if Palantir becomes actually a hot potato, everybody wants it, then also consultancy clients, the consultancy resellers see, oh, this stuff is hot. Clients are loving it. They're having excess demand compared with what they can actually serve. Here is where we come into play. So, and imagine, as we mentioned many times, the moment when you see these big consultancy companies actually targeting, okay, now let's make a call to all our customers, let's see if they actually want this stuff that is becoming hot in the market. Everybody wants AI now, so it's not that oh, please buy something from us. At least okay, we'll make you a pilot to do this. So the door is like is already open, and it is easier to step in. Obviously, we need everything takes time. We are in the enterprise sector, differently from Nvidia, where you have the high demand now that becomes high revenue immediately. With something like Palantir, you have high demand now, then there are some time to get the contact, then to get to a boot camp, then you want to talk a little bit with the board and stuff like that. Then you maybe sign a small contract, and then after months of whoa, this AIP truly works well, then you sign a big contract.
You know, as you mentioned, like previously, it was really hard for Palantir to like just go through the door. From our understanding now, if we are to believe LinkedIn, what people are saying, and Carp and Palantir themselves, is that they are fully booked for boot camps. I mean, they have to start rejecting people. But my question is always like, for how long can you run boot camps? How long can you use this sales and marketing strategy? Essentially, I mean, can you do it at 200 billion market cap 3 years from now? I mean, how long can you actually use the bootcamp strategy? Because it does have an end. I mean,
why does it have an end?
Because there's a huge AI demand now, and they are showing their products, and there's no need for bootcamps later. If we take something that's mature from Palantir, take Skywise, for example, like they onboard customers like without Palantir involved at all. I mean, their whole chain, like in Skywise, I mean, I know people that have used Skywise and essentially Palantir, they don't even know Palantir is a company. I mean, it's just so distributed throughout the whole chain of network that at some point there's no need for Palantir. I mean, for bootcamps anymore, especially when they build out the operating system for an industry where you have ready-made solutions that can just start to be deployed and sold. Like essentially there will be no need for bootcamp. So I when I make projections, I try to think like, for how long can this go on, and what happens when there's no need for bootcamps anymore? So I'm really curious what you guys think about this topic.
I think that boot camps are going to be needed very, very long in the future, because as far as I understand that the boot camps, they replace the forward deploy engineer pilots. So I think that you're correct that there is going to be a market section, maybe in the hospitals, where the product is going to be so developed that if they get a call from a hospital, then they're like, yeah, just, you know, you use this software and goodbye, don't call us. But I think that there's always going to be new industries and new use cases where the AIP replaces the forward deploy engineer. And we saw a tweet by Ched, I think, that he said that the AIP bootcamps are becoming more and more efficient, and they're able to reuse the customer models. The way I understood it is that if you're a customer, you can browse like models that customers have built, and then you can basically load that and build on top of it, and thereby you're like, you were already super effective, but now you're like infinitely more effective because you basically just jump into a solution. So what I see is that the boot camps are going to be more and more and more and more effective, but I don't see them being replaced very, very long into the future, unless we get some AGI agent and you're able to deliver it through, you know, a complete LLM that is like human-like intelligence, and then there is no need to have it, basically.
Real quick, before Arnie and Amir goes, I think Lunar's comment is the answer, right? You make it a consultant certification model. So like people are certified in AWS and Azure, you create consultants, and then they run these things across the entire world on behalf of Palantir, but not literally Palantir themselves. That is one route. I think that.
Yeah, I was gonna add that we are going to have more developed consultancies in terms of Palantir. We know that they already partner with all the major ones. I mean, Accenture, PwC and so forth, and we also will have the Foundry and AIP marketplace more developed with more solutions there. So I mean, they are moving at a quick pace to where they won't need boot camps, in my opinion. But I mean, we're talking more than a year out, so it's not in the immediate near term. But I'm still curious, when does this end and stop being needed? So I'm really curious about Arnie's take, and I think Vince said a lot of good things as well.
Well, if we paraphrase, your question is, in 5-10 years, we will see still Palantir making bootcamps. And I frankly believe yes, but they will just evolve and become more efficient. And as Vince said, they will be probably not run by Palantir only. So, for instance, I received a comment that made me realize something that I was not really considering. Let's break down what happens during a bootcamp. A client has a problem, goes to Palantir to actually solve that problem. Palantir is happy to help this customer using its own archetype, essentially previous cases that were already solved, to actually help this client solve his problem. Okay, that's great. But this means that the more bootcamps, the more customers actually explain their problems, and the more Palantir can help these clients actually solve the problems, the more Palantir itself actually learns how to solve the problems. So essentially, Palantir with bootcamps is accelerating the process of getting insights to what are the problems customers are facing. And the more they solve these problems, the more implicitly R&D they get. So essentially, they're even they receive R&D essentially for free, while also opening a door to actually sell a contract.
Which is what they did with Surf Air, right? That new company.
Exactly.
They used to work with Lilium. Surf Air, they have 5.2 million shares, and now they integrated, I think, what they were basically doing with Lilium, which is another eVTOL company, with Surf Air, right?
So take this reasoning at scale, and then you think, whoa, wait a second. I have solved this problem so many times. Since I'm Palantir, I have a smart platform that actually learns from what we do. You know what? You can actually create an archetype that represents that use cases. And then essentially you can map for every industry what are the use cases the clients need. Think this way. I need to be careful when I say this. But how McKinsey work? You have the vertical, let's say healthcare, and then the specialist of healthcare know what are the key use cases its clients want. So once you are industry aware, you know what are the most annoying problems your customers tend to have, and you will tend to have a PowerPoint, a prepackaged template of PowerPoints, and you have a set way of, okay, if you want to solve this, you need to step 1, step 2, step 3. But okay, Palantir essentially does that, but with software. And I think this tweet that Vince mentioned from Chad, can you share the screen, please? Is actually the key to understanding how powerful these bootcamps are, because Chad mentioned this thing is called a solution designer, but it's essentially an archetype book collecting all the use cases for a specific industry. For instance, here we see alerting pipeline, modeling, then below finance, holistic risk management, computer vision, defects detection. So you see, this is a use case. Now imagine this thing becoming more and more spread, so more use cases that enter this stuff, more bootcamps deployed, more proof that actually the solution Palantir provides help solving the problem. Then you have AAP learning, and guess what? I think the next phases will be Palantir essentially making the bootcamps so automated that the FDE becomes more like a manager, helping the customer dealing with AAP. So imagine if we reach a point where the FDE can run many multiple bootcamps at the same time. Obviously, it's not something that happens in a week, but imagine the power if this thing actually scales, meaning that the bootcamps become now they are limited, as Lunar said, by humans. Imagine if bootcamps become essentially not limited.
Right.
But it's so multi-layered, because I think the main point of AIP, and I still believe that, even though everything you said is true, I think they know they have the best products, but other companies were not aware of that. And we've known this for years, that Palantir's problem wasn't that they have poor solutions, it's that people didn't know about it. So getting the word out there, AIP was the solution for that. And one of the main things is like, well, give us our 10 hours and your 10 months. Like, they can actually start to prove like that they are the best solution. And as Arnie mentioned, they are leveraging use cases now to become even more developed and competitive by just being there with their customers like every day during bootcamps. But I still think the main point was getting Palantir into people's hands. That's always been the issue with Palantir. So I think the main thing that bootcamp solved was just getting it into potential customers' hand to actually prove that, no, we are the best solution here.
We are improving. Do you think there will be is there something Palantir needs actually to make better?
In regards to what? Their go-to-market?
In regards to selling, making itself more known. Like we criticized a lot in the past years. Oh, you aren't doing this, you aren't doing that. Now things are clearly
Why aren't you more like Snowflake?
It's an interesting thing to think about, because we know that Corp has said on record that they aren't constrained by cash to grow. They're constrained by manpower. And that's it makes you think, like, what does he really mean by that? So, like, what could they be doing more? He thinks that no matter how much cash they throw at the problem, it's not going to help them grow. And it's also like, not all growth is good growth.
Yeah.
There are different types of growth. I mean, they could use their 4 billion to go and acquire X amount of companies, and they could grow revenues. I mean, it's not simply about growth. It's about organic, sustainable growth. And I don't know. It's a good question, Arnie. I need time to prepare a good answer.
Well, if people are the problem, I believe the key answer is okay, you hire more, but at the same time you make.
But finding people for Palantir is not the easiest thing when you have like the best people in the world. It's not like just put out the ad out there and we can.
So how can you actually solve that? You make each employee way more effective. So essentially, if each employee can run many more bootcamps, it is easier for them to organize a new bootcamp that really empowers them. At the same time, you have each bootcamp that becomes more automated. You have the channel partner that becomes more effective. As we mentioned previously, you train customers and to run bootcamps internally. And then you have also the channel partners that are trained to make this stuff. But personally, like, if there is something that still annoys me is the website. I challenge anyone, if you go to the website of Palantir, to actually understand what it is. Like we know, because we have been a fetishist for this company for years, but AI power operations for every decision. Okay, nice. But what about Foundry? It's like go straight up. The ontology powered operating system for a modern enterprise. To me, this is not clear. The Foundry ontology is like, I'm already lost. Like
The only
what
reason
are
I
the-
got excited for them is because I like the word ontology in 2021. I was like, oh, that's a fun
yeah,
word.
but how many people know ontology
nobody.
before actually
Nobody.
knowing Palantir? Like unless
Yeah.
you studied philosophy somehow, you don't know. And I believe the real problem of this page is what's the problem? Like Palantir solves not one problem, so many problems. But here there is no point of thinking
the
what the
solution on it.
customer wants. So it's like I think Palantir has this bias in its marketing documents of we show you what we want you to know because we think we are cool, rather than focusing, okay, what is actually the problem you solve? And that's why also many people struggle intuitively, okay, what do you actually do?
It's funny you mentioned this now, and it reminded me. I don't know if it was yesterday or 2 days ago, but there were a lot of questions like this, like, well, what does Palantir do? I went to their website, I still don't understand it. And then Chad made a post like, this is how I explain it to 5-year-olds. And then Palantir retweeted that. If you have any questions, reach out to Chad, and that's their solution to this. Like, instead of going through like, okay, maybe we aren't presenting ourselves well, they're like, no, just ask Chad on Twitter, and you will maybe get
So
it.
it's a
They will
strategy.
soon add it to the website.
Yeah,
They will
that's their
soon add it to
solution.
this website. If you don't get what we say here, tweet at Chad.
So essentially, that's the strategy. Make the website so, what is that? So everything go to Chad, who's very good at explaining.
I have a question, you guys. So you know how like retail can sometimes like see different things before Wall Street, and if we are to believe our lying eyes, we see that there is so many, like the AIP boot camps are scaling. The dollar net retention was very, very low, and if that goes up, it will increase the revenue. The past AIP customers should be increasing in revenue, and there is new AIP customers that are supposed to be onboarded. So everything that my lying eyes are telling me is that we're going to have maybe an NVIDIA moment in next quarter when they report, and yet they guided for 20% growth. And is it that we are living in our Palantir echo chamber and we are becoming too bullish and we're back to 2021 and we're imagining things, or they were purposely creating something with their guidance, or they are scaling much faster than even they thought that they would be? What I'm just curious what your thoughts are about this.
I'll go real quick. I think that NVIDIA quarter maybe doesn't happen until the end of the year. I definitely don't think it's happening in Q1. I think the thing is the government side of the business is still not growing as much as the commercial side is. So to have an NVIDIA type of quarter, I think everything has to be hitting on all cylinders, or else we have to. I mean, they're guiding for 40% U.S. commercial growth. International commercial growth is not good. So for them to have an NVIDIA quarter, if the government revenue is stagnating or deaccelerating, then international has to pick up, because 40% US commercial is just not going to be enough to make the top line 20% turn into like 25 or 30 or 40 or 50. So I think international commercial is not the best. Government's definitely not the best. And then, yeah, US commercial, I agree with, I think Matt said it in the chat as well. It takes about 9 months for a lot of these IT departments to even vet the product before we land them, even if we get them as a pilot. So I think that quarter is coming, but might come Q1 2025 or Q4 2024 versus Q1 2024.
I can go next. I don't think we're lying to ourselves. I think it's very clear in the numbers, in the bookings. So I think it will come. I don't think it's next quarter. And I also don't believe completely what Amit and Palantir are echoing, that international is so useless. I mean, international, like across both segments, both revenue, both government and commercial, has actually increased compared to the US.
Yeah, but it's just UK. It's just UK. It's not like.
And even if you look at the US commercial specifically against the rest of the commercial, I mean, it's not that drastic. I mean, it stayed stagnant for 2 quarters, even though they say like US commercial is growing completely out of control. It's still like it's been 46% of the total commercial revenue for 2 quarters. Before that, in Q1, it was 45%. So it's been stagnant for a year. I mean, international is doing something. So, I mean, it's not that like hopeless. Like we hear Carp saying, we're moving personnel out of Europe. Europe can't hang, like they are slow to adapt. Maybe, but where's the growth coming from then internationally? Because US commercial as a percent of the total has stayed stagnant for a year. So, I mean, obviously there's something there. And if we look at the total, it's shrinking. So I don't know if that's the whole picture, but that also ties into my argument that, yeah, Palantir is sandbagging for sure. I mean, I'm very data-driven in my view, and the data says that they're going to have an NVIDIA moment sooner or later. I don't think it's next quarter, perhaps by the end of this year or 25, when you actually start to see the real exponential growth, because we also have to remember the scaling. All these client acquisitions, they're gonna scale. If you remember the cohort slides, the power of Palantir was always how they scale acquired customers, and this funnel to grow massively in just pure count. And then when you start to actually scale up those customers, I think we're going to see something exponential. And I don't think we're necessarily being too biased or lying to ourselves when we say that, because the data is backing that up, is my take.
Well, to synthesize, I would say, connected to what we mentioned before, with NVIDIA is like, oh, I feel I want a candy. You take that candy and you are immediately gratified. With Palantir, a better analogy is more, you plant seeds at different time. So each quarter you plant some seeds. Last quarter we got 50 seeds. In the previous ones there were 20, 30. And your job as a Palantir is just to plant seeds. And you know what? If the ground is fertile, these seeds can actually grow and grow well. And if you keep planting, sooner or later, you will see a big chunk of these seeds actually growing together. And right now, I think we are neither at the phase where we see neither the first leaf. I think we are that early. So I personally think even us are underestimating potentially the growth that could come from these customers, because differently from the big B2B companies like ServiceNow, Salesforce are the key, what Palantir achieves with each customer is essentially multiplied by at least a factor of 5, 10, because Palantir solves not only one specific problem. Let's say Salesforce, yes, they have multiple products, but essentially, if you remove the CRM from Salesforce, that is a trash company. It's just, okay, some on average SaaS, no real, really, really strong company. What Palantir does is not providing one horizontal platform, but actually solving use cases. And that is not only more difficult to do, but extremely more valuable. And you have the interaction you have from solving more use cases to solve further use cases. So essentially, Salesforce sells a platform. Palantir solves problems by building knowledge. And that is a problem that is way more deep, essentially more valuable. And acquiring a customer, explaining the first step is extremely hard. Once in, and now with bootcamps, with interest in AI, clients can actually learn about, maybe the prejudice on Palantir is actually very different. Think this way, notice already how now there are active involvement of a company to actually, okay, this is what we are, that we are not really seeing negative articles on Palantir so far. At worst, we will see articles on us, but it is we are not seeing, Palantir, the spy company. Think this way, apart from the NHS, we even got the NHS deal, which is very fit with the spy company narrative. Bloomberg wrote a new article, AI warfare is already here, mentioning Palantir 3 times, talking about Project Maven, which is essentially you're there in front of a screen, and Project Maven tells you, wait, this is a target. Identify the target. This is very dangerous. What should we do with this target now? If that doesn't become a controversy article, I think the conditions really switched.
I think geopolitically, what's happened has made people not be that upset at AI-based drone warfare, because maybe that technology is needed to defeat some of our adversaries, which is what Karp's been saying. But I agree, the whole narrative has switched. The whole narrative has switched. Spy company, Peter Thiel, all this stuff, like, it's gone. And Thiel's not as political anymore, right? He's kind of stepped out from that. So I agree. I mean, now it's just about pure execution. Let's do this last topic to end it off. Snowflake is down 20%. Their CEO left the company. We have a new guy who's the CEO of the company, Sridhar Ramaswamy. Snowflake bought his company for $150 million, Neva, which was supposed to help them build LLMs for the enterprise. And I don't know where that product necessarily is going to go, but they did like the CEO of the company they acquired in 2023. And so they made him the official CEO of the company. Slootman will now be the chair of the board. Stock-based compensation for Snowflake this quarter, rounding out the year, is $1.1 billion on $2.6 billion of revenue. Palantir at $430 million on $2.2 billion of revenue. And Snowflake is now guiding for 22% year-over-year growth, which is almost the same as Palantir. Let's start with Amir. What were your raw thoughts on the quarter? And do you think it even matters? Do you think Wall Street's just going to buy the dip and this is just like a short-term CEO type of thing? Or is there a real implication in the context of this and Palantir?
You know, I don't really track or analyze Snowflake at all, but I am curious, like, about the sell-off, because when people talk about Snowflake, they mainly mention Slootman. The same way when people talk SoFi, they're very quick to mention Anthony Noto, right? Like, this is the man. I trust this man. I believe in this man's vision and everything like that. And we also used to have, as we mentioned, like, the narrative has completely shifted for Palantir, but for like whole of 21, 22, start of 23, people were advocating for, like, Karp needs to step down. We need someone else. This guy doesn't know how to run the company. But I think, like, if Karp were to step away now, I think Palantir stock would do something similar to this. So it's a very curious dynamic there. I mean, in terms of Snowflake as a company, I think me and Arnie collaborated on digging up some data in regards to, like, what kind of a scam the Wall Street analysts are running on in regards to Snowflake, where they IPO'd and sold it to their banking clients at 120. So even though it's only worth like $50 a share, if you use their own projections, like, not something I made up, if I just use Wall Street's own projections, you arrive at something like a $50 per share, but their target prices are like 180. So of course they can't admit to their banking clients, like, yeah, we scammed you guys, this company is not worth shit. But yeah, I mean, it's expected. It's coming closer to where it should be trading. I think it was very, very overpriced. I mean, but I don't know the company. I can't really comment too much. But I think the Slootman dynamic in parallel with, like, Karp haters, I do wonder what the opinion and consensus is on Karp leaving and giving room to someone else, how that would play out for Palantir stock.
Vince, your thoughts on Snowflake?
For me, I'm also not an expert on Snowflake, but it's this ultimate battle between short-sightedness and, you know, long-term investing. And I remember a year ago or 2 years ago, almost every Palantir okay, that's wrong to say, but a lot of Palantir investors were saying that Palantir should be more like Snowflake, and, you know, they should communicate like Snowflake. And there is even one investor who made a bet with another about which company is going to outperform. We all know who I'm talking about, and that didn't turn out to be so good for that specific investor. And then you see, as time goes out, time is the enemy of a, you know, hype company and the best friend of a very good company. And Palantir turned out to be the good company who was doing the tough things at the time, and doing things with a long-term focus, and they won out. That's my opinion.
Arnie, Snowflake, what implications on Palantir given their earnings?
Well, I would say the earnings were not bad. They were still talking about a company having a good free cash flow, good growth. I think the problem, as we mentioned, is more about what Wall Street thinks of this company, which is a good company, but I believe what we discussed many times here at Palantir Weekly actually came through. Like, what are the consequences of having a thin product that is pushed by sales? Is that you have a company that on surface is really good, but it will inevitably struggle with scale. First sign of weakness was the huge M&A ramp up. They made only last year 4 or 5 M&A, and now we better understand why. Essentially, okay, we need to do something in AI. We are not really able to develop new things, and that's the state of the art. A company that was super hyped because building from a relatively small scale, a small number, the growth was insanely good, 160% growth year on year. Then this growth gradually declines with scale. And you know what's the two big problem is a database, yes, is cool, but that's not the end goal. Like right now, there is, by talking with people, I realize there's a problem with databases where essentially you are charged for putting the data into the database. Each time you actually need to take the data out to do something, you are charged again. So essentially, Snowflake is over earnings for something that is not really valuable, and you can actually bypass this essentially by processing the information and then use the warehouse or data lake just for the data already processed. So there is a structural problem on the tech side. Unfortunately, I'm not an expert enough to define this, but from the conversation I had with someone who's deep into this, I realized, okay, there's a structural problem on data warehouses that are not that useful once there are alternatives like processing the data directly. For instance, I think this way also with virtual tables. Palantir, what does, they act as a processing layer, and they don't need the data to be stored. The data is already on the AWS, so it's already on the cloud. You have the data on the cloud, you process it, and then only the process thing. So you don't have to collect the data on the warehouse, then extract that and process that and bring the data back to the data warehouse. So structural problem there. There's a business problem that is related to the business structure. Palantir, the more it scales, I believe the more it can scale and even accelerate. So not only sustain the growth rate at scale, but even accelerate thanks to network effects. So all these dynamics that seemed irrelevant, seemed not really impact the business of Palantir. At scale, they will be very dominant, very impactful, meaning Palantir interacting with the customers and the customer interacting with its customers, essentially forcing gradually the industry to get into Palantir. And there's an employee problem. I have this slide that tells us that Snowflake, known essentially for being a product-driven growth company, is not really driven by the product. It's driven by sales. Palantir has 4K employees, mostly engineers, some sales, very little sales, and Snowflake is a 7K employee company, of which 3K sales. That's huge. So this is essentially a company that in order to keep growing, they need to keep hiring salespeople. This is great to grow at a low base, but is very bad to grow at a larger base. Even worse when you don't really have a very big, how can I say, a very good platform to build new products on top of it, which makes you use a lot of M&A. And what's worse is Snowflake is essentially look. Like I think these numbers are more than insane. The blue line is Snowflake R&D expenses. The orange bars are Palantir R&D expenses. Snowflake spends 3 times in R&D what Palantir spends. 3 times.
Wow.
Is Snowflake 3 times more innovative than Palantir? Hell no. It means they are desperate in hiring people to build stuff, while Palantir spent 20 years to build a tool that creates the tool. So essentially the same reasoning Tesla is building. They build the machines to build the machines. Palantir build the software to build the software. And yes, it took 20 years of an unprofitable growth, but now that the world changes fast, at this very marginal cost of $100 million per quarter in R&D, they developed products, they developed many products, and they are more effective rather than Snowflake having this ramp up. So to me, this screenshot already tells, okay, there is a superior company in play.
That's a good breakdown, man. It's a good breakdown. Go ahead, Amir.
Yeah. Thank you for that, Arne. It was very insightful, and I agree with your parallels drawn. But I'm still curious about your guys' opinion on what would happen to the stock price if Alex Karp was to leave. Because I think a huge difference here between the two companies is that Palantir, we've heard this time and time again. We know how aligned all the employees are to the core values of the company. I don't think it would be as destructive to Palantir if Karp was to leave, because I think his alignment and goals are aligned across the whole employee force. We know that they have a specific culture over at Palantir, and I don't think that would be lost if Karp was to leave. So I don't think for the company itself, it wouldn't be as devastating. Of course, I like Karp. Of course, I would like Karp to stay. But would we see how much did it drop? 20-30% in a day on Slutman leaving? Do you guys think we would see the same for Karp, or would even the stock appreciate? Perhaps people think we're getting some more Wall Street groomed head or something. But yeah, I think Palantir is way more robust as a company, and this culture is seeping through down the ranks. I think they're all aligned. They don't have hierarchies similar to a traditional business. We know that people on all levels have some form of decision making responsibilities. So I don't think Karp leaving would destroy the company the way that Slutman leaving would destroy Snowflake, for example. And I'm not sure if the stock price would drop by 20-30% on that. What do you guys think?
I think if retail is so heavy into Palantir and retail loves Karp, retail might sell the stock if Karp leaves, right? What you're saying makes sense, Amir, that maybe the street would actually be happy if Karp left because they would get someone more polished. I still think the street would be very taken aback because the street, I don't think they hate Karp anymore. I mean, every price target is fair range. Only Rishi, who's stuck at 5, but everyone's kind of adapted to Karp. I think they actually secretly like him when he talks as confidently as he does, right? So if he stepped down and Sham stepped up, which Sham is amazing. I just think the street would be caught off guard, which is what I think happened with Slutman. The thing is, they replaced him with someone who no one knows. Yeah, I know the guy was really good at Google, but really no one knows this guy. He's not Slutman. People knew from his days at ServiceNow. So you replace him with a Google exec that worked in advertising. What exactly does that mean for enterprise software? It doesn't mean there's not a correlation. It just doesn't mean the street can make sense of it. I think if Karp stepped down, the street would be upset, and I think retail would be upset. I would have to heavily think my Palantir position if Karp stepped down. It would be tough. It'd be very tough. Arnie, what do you think? Do you think the street would get upset if Carp stepped down?
I think that, well, there are two layers. The immediate stock price would probably get hit, and I would understand that, because for many, we want Carp to actually lead the company. But on the other hand, probably, well, we know that sooner or later that moment will arrive. Like sooner or later, Carp will say, okay, now it is the time to have someone taking my place. But I would say it is important how and when it happens. If that happens from a position of strength, I would be more than happy and relaxed, especially if that one is Sham, who now I'm very confident with. If it was Sham from 2 years ago, I would be damn scared. Like I was not comfortable with Sham 2 years ago. Now I am, especially from the recent conversations. It's like it is like a new Sham. I love him. But I think operationally speaking, he could do very well. So that would be like an initial hit, but over time, no problem. With Snowflake, I think there is different. Why? You have the perception that was very anchored to Slotman. Okay, fine, he's a very good manager, but essentially making CEO an outsider. I mean, it was from inside the company, but from last year, that makes him an outsider. He's admitting the corporate culture fails.
Yeah.
Fails so much to develop even one figure that could lead the company.
Yep.
That is an epic
That's bad.
fail for the
That's
company.
very
So
bad.
it's not only the stock price declining, it's the company admitting we can't build new products. We need to buy new companies for M&A. Our culture sucks so much that we are not able to develop a new figure that could lead the company going forward. What kind of tech company you are if scaling at scale and having a strong culture is what really defines a software company. So,
and Wall Street was obsessed with them because of the growth rates, and they didn't understand Palantir because it was more product versus growth. Retail was obsessed with the product. We were more lenient on the growth. And I think ironically, without product, you don't have growth long term, which is what Carp has said for years, right? That these products are very thin, they're commoditized. You're going to have thousands of clients, but they're not going to be thick enough to really change an organization and eventually be transformational.
And as you guys have always said, what is easier to fix, sales or product?
Right.
That's it.
Right. All right. That's it for us, folks. Thank you, everybody, for joining. 310 people. Everyone's Twitter is in the chat, please, or in the description. Please make sure to follow us there on Twitter. And we'll see you guys next week. S&P did not happen this week. It was Deckers and SMCI. So we'll see in the next 3 months if that happens. And yeah, we'll keep going from there. No other crazy news this week on Palantir, but we'll see what happens next week. Cool. All right. Thank you, everybody. We'll see you next week. Have a good one.
Bye-bye.
Good night.
Yo.